Welcome friends to the 24th episode of Educative series. This series will talk about the commentary on IPO of Swastika Castal Limited. This company is going to be listed in the SME segment of BSE. The IPO is open from 21st July 2025 to 23rd July 2025. The RTA for this IPO or this company is Accurate Securities and Registry Private Limited. The minimum investment at the time of allotment is rupees 2,60,000. Now we'll talk about the disclaimer. I am currently not registered with any regulator in India like RBI, SEBI, etc. The remaining part of the disclosure you can read at leisure, which is available in front of you in the screen. As far as issue details are concerned, the issue size is of 21,64,000 shares, which includes 1,10,000 shares which will be reserved for the market maker. The minimum lot for allotment is 2,000 shares, while for application it is 4,000 shares. The shares of rupees 10 each. This is a fixed price IPO where the price is put at 65 rupees. There is no employee reservation in this IPO. Now we'll talk about the company in brief. The registered office of the company is in Calcutta, West Bengal state. The corporate office is in Vadodara or Baroda as it was called earlier in Gujarat. Manufacturing facility is also in Vadodara. There is only one manufacturing facility as on the date of the IPO. The lead manager for this IPO is Horizon Management Private Limited, a Calcutta based or Kolkata based firm. The market maker is Horizon Financial Consultants Private Limited, again from Kolkata. This company was founded in 1996. There is one group company of this company, that is Swastika Medcast Private Limited. This company has made huge losses in the past few years, because of which it is having negative net worth as per the IPO prospectus. This company is in the business of aluminum castings. The IPO is purely a fresh issue IPO where the 100% is a fresh issue. There is no OFS part involved in this. The proceeds of the IPO will be spent towards capital expenditure in terms of buying equipments for increasing volumes, working capital and general purpose office expenses. There is no monitoring agency involved in terms of monitoring the proceeds of IPO, expenses of the proceeds of the IPO, to see whether they are used for exactly the same purpose and at what intervals, etc. This will be handled by the management. Now, if you look at the financials of the company, if you look at the past 3 years, 22-23, 23-24 and 24-25, the revenue of the company has been 24 crores, 22.77 crores, that is little bit less than the earlier year, and in this year it is 29.66 crores. While the revenue has been increasing, the PAT, that is profit after tax, also has been increasing slowly. First it was 0.58 crores, that is 58 lakhs. The second it was 65 lakhs or 0.65 crores. And the third, that is 24-25 year, it was 2.63 crores. As against the same period, the total assets of the company increased from 26.23 crores to 23.82 crores to 30.83 crores. If you look at the graph, it also shows you a bar graph on the total value of revenue, PAT and total assets. Further on, if we see a comparison of the top 5 customers from whom to whom the produce or the products are being sold for 22-23, 23-24 and 24-25, it's been 21.49 crores, which constituted then 90%. Then 23-24 it was 18.73 crores, which constituted 82%, and in 24-25 it was 23.82 crores, which constituted 80.89%. As you can see, the concentration risk is rather high at 81%, almost 81%, but the company has done well to reduce it from 90 to 80%. Now, if you look at the suppliers, at the people who supply the raw materials for making these products in the company, you will find that the top 5 suppliers for the 3 years in question have supplied have supplied raw materials worth 8.64 crores, followed by 7.78. So there is a slight decrease, followed by 11.11 crores in 24-25. Against this, the percentage is 90.80%, 94.7%, and 70.54. Here again, you can see that the overruns on the top 5 suppliers has been reducing from 90% in 2023 to 70%. So the company has done well to reduce, but they have to do further in terms of reduction of the concentration for both customers as well as suppliers. In terms of cash flow related activities, for the same 3 years, trade receivables for 23-24 is 5.71 crores. In 24-25, it is 10.69 crores. So you will see that there is a jump of almost double of what it was 23-24. So in terms of receivables, the company is finding itself out of cash as they have not been getting the money in time. If this goes on, there could be pressure on the profitability of operations. As far as investing and financing is concerned, they have clocked losses or negative impact of 0.80 crores in 22-23, followed by 0.74 in 23-24 and 1.3 in 24-25. Financing also has not done greatly well. In 23-24 it was minus 1.7 crores and 24-25 it was minus 0.98 crores. So the company is not done well in investing and financing activities. So if the company were to have higher trade receivables and lower cash flow in terms of investing and financing, there could be issues in terms of profitability. The debt equity ratio for the same 3 years has, in terms of number of times, has decreased from 1.30 to 1.12 to 0.85. So 0.85 is rather not very unhealthy, but it can be bettered further. So maybe they will reduce it further as we go along, because one of the objectives of IPO process is also to retire some debts and to ensure that they are funding it through the IPO money for working capital and capital expansion. As far as return on equity is concerned, it is 8.24%, followed by 8.43%, followed by 28.17%. So return on equity has really done well in the last 3 years, which the company, if they manage to maintain the same, you will find better return of equity in the following years. Now we'll look at the various factors, that is strengths and weaknesses of the company. So here the basic government policies of India as well as Europe and US, where the company sells its products, will create an impact, positive or negative as the case may be. Same with the policies issued by various government agencies as well as the regulators could create positive or negative impact in the company's balance sheet. Followed by taxes and tariff. The taxes have a way of adversely affecting the top line or bottom line of the company, or both in some cases. As far as tariff is concerned, if the tariffs in any of the countries where the company is selling its end products, if the tariffs are increased, there could be problem with respect to lesser sales in those countries. To that extent, there could be hit on the top line and hence the bottom line. As far as litigations are concerned, the company is fairly okay in terms of not having too many litigations, except for one civil litigation on the group company, which the name of which we saw earlier. The company is gung-ho on trying to increase the carbon footprint. So in terms of furnaces, the coal-based furnaces have been replaced or is in the process of being replaced to electrical furnaces. This will definitely reduce the carbon emissions. Similarly, for the electricity requirements, they have gone in for solar panels, which is in the process of being completed. So this will reduce the carbon footprint to a large extent, thereby ensuring that the company is carbon positive as we go along. The company has also obtained 3 ISO certifications: 9001 of 2015, 14001 of 2015, and 45001 of 2018. 9001 is for quality management system, 14,001 is for environment management systems. Occupational health and safety is under 45,001. So having all these three certifications ensures that the health of the workers in terms of safety standards and good processes is maintained. The environment is kind of managed. Also, we saw the earlier two options of solar panels and electrical furnaces. In terms of 9001, it is basically quality management system. So they follow process, written down process to the T. That is why they have been given all these three certifications. Okay. In terms of capacity utilization, the company is utilizing only 57.5% of its total capacity. In the processes, there is a CNCM, which is computer numeric control machining, and the second type of testing is helium testing processes. These two have almost 95, 97, 98% capacity utilization. So part of the proceeds will be used for enhancing these two processes, that is CNCM and HTP, as is mentioned in the prospectus. So this will kind of make available some spare capacity in these two processes, thereby increasing the total capacity utilization indirectly. There is only one manufacturing facility which we saw earlier also, which is located in Vadodara. So any issue which is in Gujarat. So any issues in the state of Gujarat in terms of policy change, in terms of geographical issues, in terms of strikes, riots, etc., in that location where the manufacturing facilities will create problems with respect to release of finished products. Now this company is in an industry where there is a high entry barrier. To that extent, competition will not be zero, but it will be difficult for somebody to come into this industry and start immediately. To that extent, the company has got some breathing space in terms of being able to manage the process in such a way that the competition is not does not affect them suddenly. As far as the marketing is concerned, there is no special marketing team. So whatever contracts they get today, it's all because of the direct contacts established by the promoters. That is the Sardas who are the promoters of these companies. The company has not have signed any long-term contracts with any of the suppliers or the clients, because of which there could be issues with respect to continuity of operations in terms of raw materials also in terms of selling of the finished products. This is definitely a risk. So the company should look in terms of ensuring that there is long-term contract signed with somebody, so that the price as well as the period is kind of defined and is kind of fixed for the company. As far as regulatory non-compliances are concerned, the company has in the past 5 years done a lot of non-compliances as far as filing GST returns are concerned. These range from 1 day to almost a few days, maybe 10-20 days. But the company in 2023 took a decision to have automated process or systemic process of ensuring that the GST file forms are filed in time, and rightly so. The last non-compliance was observed in June 2023, after which there have been no non-compliances as far as GST filing is concerned. To that extent, the company has been true to its word, ensuring that the GST returns are filed on time. Now, as far as the records are concerned, the company confirms that the corporate records of the first 3 years of operations, that is 97, 98 and 99, are not available with them. In terms of insurance, the company has mentioned that although they are insured, they may not be at times adequately be insured. This could be a risk in case of some accidents that were to happen either in the factory premises or in the process of logistical movement of the goods, the raw materials, or the supply driven finished goods. So this could be an issue in terms of not getting the complete insurance. Another important thing is the logo of the company is not registered. This could create problems in future if this logo were to be claimed by somebody else. Of course, the company can show or exhibit the fact that they have been using this logo since quite some time, but that will take time and efforts and fighting for their rights. So it is best that the company try to ensure that the logo is registered as quickly as possible. In terms of EPS calculated, as per the prospectus, the company's EPS comes to around 14.80. 14 rupees 80 paise. The peer group EPS for high and low within the peer group is 23 rupees. To that extent, the company is almost 50% less priced than the competitor or the peer group. Now we have actually in this episode, we have summarized the RHP, that is red herring prospectus, and placed it for you to peruse. This is going to be purely an educational exercise to make the viewer aware of the pros and cons of the financials and the strengths and weaknesses of the company. In light of the above, there is no reference to the price on offer, prevailing grade market price, possible listing day earnings, etc. Should you find this video informative and educative, kindly pass it on to your friends and relatives. Please press on the like button and subscribe to this channel. Thank you. Should you have any doubts, queries or suggestions, please contact at ramkbharosay@gmail.com. Thanks.